Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Joyce, managing director on Nasdaq's market intelligence desk, for an update to watch on technical levels in the Nasdaq 100. Brian, it's great to see you as always. Welcome back to Trade Talks, and let's take a look at some quick levels here because it seems as if the market digested the uptick in inflation that we saw earlier this week.
Yeah, so we're having a good day today. We're still just barely now positive on the week with the NDX today up 1%. We've been highlighting this rising trend line, over the last few calls that we've had together. It's, started from the lows of January. We tested it in March, and that kind of established the trend line. And even more so, it became important on the test in a couple of weeks ago in mid to late August. So here we are today, moving a little bit higher. So the recent high up here is pushing up against a price gap at 15,636. So that's a minor resistance level I would look to. I do notice a lot of technicians looking at this potential inverse head and shoulders continuation pattern, which we see. Let me clean this up a little bit and zoom out. Right here with the left shoulder here, potentially that being the head, and then here's another right shoulder. So, that would be constructive if, in fact, that does play out. I tend to look at the horizontal lines and put greater importance on those. So that 15.6 level I was talking about, to me, is the near-term level to key on. And so, as you noted, we did have the inflationary data come out. Nothing too extreme yet, but the trend this year has been, disinflation. We still have inflation, but it's slowing. And the last 2 months, we've seen that turnaround in CPI data, and just today again with the PPI data coming in a little hotter than expected.
Yeah, so I think, Brian, really what the story is here, that this environment supports higher rates for longer, and then also the uptick that we've seen in the dollar.
Yeah, exactly. So if we look at the U.S. dollar index, we can see today, it's having one of its best days in quite some time, and more importantly, it's been breaking out above a number of resistance levels. We first had this declining trend line, which it got through in mid-August. Then we spent many days, maybe a couple of weeks, on this 200-day moving average, and then 2 weeks ago we launched off of that, and then we've spent the last week trading right around this resistance level, minor resistance at the May high. And today's really the first day where we're launching higher from that. So the next key hurdle is this year's high, the 2023 high, which is 105.88. That was set back in March, right at the peak of that, right just before we went into the banking turmoil, and where we saw rates then collapse and the dollar kind of followed lower as well. So, part of this is being driven by the economic data. We did have an ECB meeting today where they had a dovish hike. So they did communicate, the ECB, that is, that they may be done with rate hikes going forward. That's, a fluid situation, just like our case here in the U.S. They'll, adjust as the economic data comes forward. So we'll have to wait and see. But at the moment, this move in the dollar, we also have, what's going on in the long 10-year Treasury yield, which is setting up a potential move higher as well. So there's a lot going on there, which I think would be concerning. If we see a continued move higher in the dollar, if we see that breakout above 3.35 in the 10-year Treasury yield, the commodity index, which I just was pulling up right here, this looks like a potential bottoming pattern forming really since the first quarter, which that's breaking out. Today's its fourth day above its 200-day moving average. Before last week, this index hadn't had 2 consecutive days above its 200-day since almost 12 months ago. So we have some key technical resistance in this index, the commodity index, around 108.5 up to that 110 level, which is this second half 22 support line. One of the biggest commodities within this basket we know is oil. And oil, we can see, has been breaking out higher as well. So that certainly is a big concern as well. If oil continues to trend higher, and who knows where it's going to stop, I would say that the next key level from here is around $93, which was a short-term top in early 22, then support in the middle of the year, and then resistance and support as well going back into September, really late Q3 and Q4 of last year. So a number of factors kind of going on right now outside of equities that I think down the road is potentially going to be impactful for equities. And if we have everything going higher, rates higher, dollar higher, commodities higher, I would think that would be concerning for equities.
Well, certainly it would be. I mean, the oil prices where they are right now is certainly not helping inflation data, and that's such a key component of it. But I also think it's important to note out, when you look at the longer end of the curve, it seems as if you're starting to get some consolidation there, though.
The longer end of the Treasury curve.
Right.
Yeah, so the US 10-year yields, we've been highlighting the fact that over the last few weeks, it's been consolidating below the October 22 high, which was about 3.34%. We can see that right there. And so the concern here is that, this base is about 110 basis points wide. I'm on a log scale right there, which is maybe better suited for equities. But so if I adjust that to a normal scale, it's a pretty decent sized base right here. So if we have that breakout, you can see this looks like a cup and handle pattern where 5 weeks of sideways consolidation right below last year's high. That breaks out to the upside. The expectation would be that this would move another 110 bips higher, which would put it at 5.45%. If that is to be in the cards, then certainly you would, that's going to certainly be impactful to equities.
All right, Brian, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.